All right, we are live from RTD Q&A. Excited to have first-time guest, Mr. Jeff Booth, joining us here. And so I appreciate you, Jeff, taking time to join me here on this live stream here. And so as I referenced before going live, one of the community members reached out to me and referenced a video or interview you did a while back and said, you got to have this guy on. So I said, I'll reach out to him and see if he'll join us. And so here you are now. So I appreciate you taking time to join us here on RTD.
Thanks for having me, Mike.
Well, I appreciate you, as I mentioned. And so for those that may not know who Jeff Booth is, can you give us a little bit of your background? And so we're going to definitely touch on your most recent book here, The Price of Tomorrow, Why Deflation is the Key to an Abundant Future. So we're going to dive into that because I know technology and deflation, you got some interesting concepts you want to share with us. But before we dive into that, can you give us a little bit of your background and how you've got to this point in your career?
Sure. I'm a technology exec, founder, technology exec, and boards of a whole bunch of technology companies. One of the companies that I founded went to about $500 million of market cap, creating a marketplace platform, and so, but longtime technology execs, so see the world through the lens of what's happening and how fast technology is changing, changing the rules by which we live. Right. And that bumps up against economic systems that we've long since trusted. And it bumps up really hard, and they don't go together, right, the way that they're formed today. So I wrote the book. I wrote the book actually thinking about my kids. I'm not an author. I wrote the book, and it just happened to land and predicted all of the events that we currently find ourselves in. So it's blowing up.
All right. Okay. Well, so for those that are just joining in now, just to give an idea of what we're talking about here. And so I'm excited to dive into some of the concepts, and I haven't had a chance to read it, but yet we're going to dive into it today. And hopefully those who watch will have interest and go out there and grab it and definitely learn a lot. So the price of tomorrow. And so deflation. And so we all know that there's a mandate that the Federal Reserve has taken upon themselves or been given by the our government here of 2%. And so for some reason, the Federal Reserve can't seem to find 2%, no matter what they do or how much quantitative policy they create. And so let's get into a little bit of that deflation, inflation concept. Give us some of your research on that and how technology plays a role in that.
So first of all, I think you need to remove the emotion from inflation or deflation.
Okay.
It's just who wins, who loses.
Okay.
Right? So inflation is when the currency value goes down and goods and services go up in relation to that in price. So assets go up. And as a result, if you borrow money early on and you can inflate your wage, you pay back the dollars of debt with cheaper terms tomorrow. That's inflation. So certain people win, right? Owners of houses win. Owners of businesses that put more debt on and leverage that debt win. And then deflation, holders of currencies win, right? Because the purchasing power is more over time. And we've been deluded into a false sense of security that one's bad, one's good. There is no good, bad. It's just who wins, who loses.
Okay.
Right. And technology makes everything more abundant. A really good example is your cell phone, right? 13 years ago, the iPhone or smartphone didn't exist. Look at it today and ask yourself, how much of it do you pay for, right? For $50 a month, you have power that presidents of countries didn't have 20 years ago. Right. You have the information of the world, and it's all free. Right. And then your calculator's free and your phone's free and everything's free. And what ends up happening is economics is built by scarcity, but technology creates abundance. Right. And the more abundant things are, the price keeps falling. Look at oil just yesterday. Right. Yeah. When things are abundant, price falls to zero. The air you breathe is abundant and you don't pay for it, even though it's the most valuable thing in your life. And we've deluded ourselves to think that we can create artificial scarcity, right? The only thing that is in the future with technology, how fast it's moving across everything, is that should provide abundance and cheaper prices all the time.
Right.
And that wouldn't necessarily be a bad thing. It's a bad thing against the existing system we built that's always been inflationary, because the debt can never be repaid, right? But there's nothing central banks can do about it, no matter what, in the end, right? You could you could destroy your currency value, create hyperinflation in the short term to be able to essentially reset the debt and all of the economic damage that comes from that. But in the end, technology is moving so fast across our world, and it provides cheaper and cheaper prices. So why wouldn't we let that happen?
All right. So I apologize for that. Looks like we had a little
A little glitch.
Yeah. So speaking of a glitch, right before we go in live, we had one. So we'll pick up where we left off at. And so hopefully there'll be no more issues such as this. But deflationary aspects of technology makes things more abundant. And so with that being the case, you say everything we have now is free. So, we have access to all the apps and the services, and the apps are all free, with the exchange of our data and things like that, where they build, profiles for us to do things down the line, market to us and things like that. And so, and at this current environment we're in now, deflation is a bad thing given the debt-based monetary system, as you mentioned. And so the Federal Reserve clearly know that. I mean, the whole central banking model is designed to further expand debt with the idea of never being able to pay that back in the future. And so at this current rate now, especially all the things happening now with this lockdown, has things been accelerated because of the lockdown and the current meltdown that we're experiencing from too much abundance of oil and, not enough consumption out there and things like that?
It's absolutely been, it was going to happen anyways. All it's done is pricked a pin in the balloon, and the balloon is so Zoom or different has gone from 10 million users to 200 million users, right? Mm-hmm. And that's the first order consequence, right? And people go, wow, Zoom stock price is great company, everything else, and all of the video platforms are doing the same.
Right.
That's not the question we should be asking. The question we should be asking is, how many is it going to go from 200 million back to 10 million, right? And we know it isn't. There's no way, because businesses are going to make by with less, and working from home is going to. So maybe it goes from 200 million, and it's way more than that if you added up all the technology platforms that are doing the same thing. Mm-hmm. Maybe it goes from 200 million to 100 million or 150 million. All of those people that are currently are actually in offices and pushing up unnatural commercial real estate prices. So commercial real estate prices have to fall if Zoom doesn't go back from 200 million to 10 million. And if commercial real estate prices fall, then the banks and all of the leveraged loans against commercial real estate falls, right? This is so deflationary across everything. It's staggering. And so what governments are doing is, if essentially the $2.3 trillion that the Fed took off the high yield bond, right? Yeah. All that looks like is subprime. And the interconnections of subprime are global, just like in 2008, because if you let it fail, it just unwinds the whole system and the banks fail. That's what the Fed is trying to stop at all costs. But and I doubt in the end they'll be able to stop it.
And so I would imagine that they're aware of that, and they are going to do everything they can to try to prolong this thing until we're either rolled into something new, or, not really sure how it's going to play out. But yet, on top of that, technology is going to be heavily utilized with the announcing of the digital dollar. And so the monetary base is primarily digital in nature, but it looks like the agenda is to remove cash and things like that as well. So technology will be utilized. And so we have the introduction of, the blockchain or cryptography and things like that, and Bitcoin. And so let's talk a little bit about that technology there. That's, as you mentioned, it's going to be deflationary in nature. It typically is. So give us some insight onto that, like what we're being rolled into, you think?
So I don't think governments on their own have a chance of stopping this, right? So in 2008, this should have reset the system, right? And all they did is created a bunch more debt and made the problem that much worse. Yeah. So when you actually produce that much debt, so over the last 20 years to stop, to stop deflation from happening. There's been $185 trillion of global monetary printing or debt creation,
Mm-hmm.
and it's produced 46 trillion a year in actual GDP growth. Every year it gets worse. That's before this crisis.
Yeah.
So you had a $250 trillion global debt against an $80 trillion global economy. Now, what do you think global debt is going to be looking forward? And what do you think the global economy is going to be going forward? And at some point that breaks, right?
Yeah.
You could say, does it break on this one, right? If we do another $500 trillion of debt that can never be repaid, is that enough? But think about what that does by artificially propping up the asset prices. And that's a real problem. When you don't let something fail that should fail, you're picking the pocket of savers and some of the population and enriching and giving a gift of money to others. So if you own an asset that isn't allowed to reprice, market economy that essentially the government reached in and said, we're not going to allow repricing, we're going to bail it out. Mm-hmm. That asset rises in price, and then you charge more rent for it. And the government then has to step in and protect all the people that you created the problem in the first place, mm-hmm. by creating by warping capitalism. Yeah. So at the end of the day, and so now attach that to digital money. Interest rates are going to go negative, and I don't mean just zero bound. I mean, mm-hmm. negative. Yeah. And one of the reasons that they can't go negative too far right now is because people would take the money out of the bank and put it under the mattress.
Which they're doing in some countries. I just did a little news update earlier about how in Russia, due to the same lockdown threats and the concerns of the bank, over here we've been doing hand sanitizer, toilet paper is the items that people have been rushing to get. Whereas apparently in Russia, they've been running to the ATMs to get out as much as they can because they don't have any confidence that they're going to be able to go back to whatever that norm is.
Yeah, and a digital currency, effectively what you could do with a digital currency if it was owned in a country, mm-hmm. instead of a global digital currency, what you could do is you could take a negative interest rate, instead of people pulling it out of the banks, you could essentially tax the digital anytime it was removed. So you could take interest rates to -6%. Right? So control of currencies digitally, it just turns into game theory, right? If a government controls a currency and is able to manipulate the currency, essentially pretend it has value to manipulate it, then every other government does the same thing. Mm-hmm. And it's a race to the bottom on currencies. And then you have trade wars because you've actually ruined the foundation of trust that a currency is, right? So if you loan me money and then I can't pay it back, and then you loan me more and loan me more and loan me more, and I can't pay it back at some point, and I change the zeros on the bills and I pass it back to you and I say, oh, here it is. Eventually you stop believing in the trust of that trade dynamic. That's what's happening globally.
Yeah. You mentioned just a moment ago, capitalism, and not allowing capitalism to run its course. And so capitalism to a lot of people in the political realm has been labeled as a bad word. And so it's the greedy, those that have and those that do not have not. The income inequality is so wide now. We need to step in, just i.e., certain people in the government saying that we need to start giving out now. So no longer do you have to really earn because we're on lockdown. So we're going to stimulate you directly through universal basic income and all that type of legislation is being thrown out there. And so clearly that is not something that is sustainable. So I'm assuming in doing all that, there's an agenda that will probably usher in this digital or new monetary base that would come in after a result of this, you think?
I think you have to move up a level, mm-hmm. And say globally, the what is money? Why money exists? Why a lot of the people that would listen to your podcast believe in gold, because mm-hmm. it used to be tied to money, right? And it made sure that you couldn't warp money. Mm-hmm. And so if all of the other derivatives, all the other second order consequences are coming because we're warping that foundation of trust. Mm. And so now, and then you have both sides of the political aisle, socialists that are screaming at each other on a legacy system, and both sides are wrong. It's the legacy system that's broken. Here's probably a good analog to this. Blockbuster was the king of rentals for a long time. 9,000 stores, cost, everything else. What they couldn't see is how fast technology was moving. And the minute that Netflix went, instead of delivery of DVDs, went to streaming, Blockbuster's business was over, right? There's nothing that they could do to stop that. What they did, and instead of buying Netflix and seeing that the change had already happened, it was a structural change, right? Instead of buying Netflix for $50 million when they had the opportunity, they had added candy aisles to their stores. Because anytime somebody watches a movie, they want popcorn and a movie, right? and candy, and in retrospect, it seems so ridiculous, right? What I would argue is what central banks right now are doing, and what our governments are doing all over the world, is adding candy aisles to our stores. They don't see it, and nobody does. Technology is so, and just like Netflix created and Blockbuster was destroyed, that's what's happening across every industry with technology. It's moving so fast into every corner of our society. So the same advantage you get in your cell phone, that, by the way, that price decline against the abundance come with how much printing we've done. So in real terms, it's come down way more. That technology is the base layer of everything we're doing now. It's moving across every industry with blinding speed. So we should expect that type of abundance. There's nothing that governments are going to do in the long term to stop that.
Whew, interesting. So for those that are watching, for those that might have just joined lately, we have Mr. Jeff Booth here, the author of The Price of Tomorrow, Why Deflation is the Key to an Abundant Future. And so now we'd like to transition into the next paradigm, or the new paradigm, because a lot of people think that after all this situation unfolds and the medical and health side is no longer a primary issue, that we're going to go back to the old norm. And I'm not of that mindset. I think there's a new norm coming, and technology plays a major role in that. And so there's the job front will change completely. And so with the introduction of artificial intelligence, virtual reality, Internet of Things, and the drone technology, self-driving car, all that stuff like that, I imagine is going to be sped up. As you referenced, technology is exponentially increasing now. What do you see as far as the sectors you're in and things you're involved with AI and things like that? And how will that reshape the concept of work moving forward?
These are big questions.
Sorry.
Yeah, but and this is gonna sound bold to your audience if you're not as close to AI as I'm really close to AI. Some of the top researchers in the world are close friends. I'm helping some of them on company formation, and not just where AI is now, say machine learning with deep learning algorithms, where AI is going, how fast it's accelerating. Google couldn't order their 130 trillion websites without it. So it's an index of 130 trillion web pages. And you trust the first position out of AI. That would normally have taken human hours, crazy to be able to do. So Amazon's 550 million products are sorted by AI. And what you think, you would never know that there's 550 million products, because the best one for you is at the top of its list every time. All of these things, the voice search, the image recognition, it's moving so fast. And here's probably, and even at a deeper level, people think AI isn't creative, right? Can't be creative, and it can't beat humans. It's beating humans in all sorts of disciplines right now, and it's getting better at a rate that is nonlinear. So if you think about our human intelligence, it actually comes from error correcting. Right. The people that read more and correct errors. So we take what we learn, we put them into books, we put it in books, and we can error correct out previous mistakes faster. Right. Even the whole 10,000 hour theory, where you practice more and you essentially you're removing errors, mistakes, and your neurons are firing, and you zone it, you're zoning, and you can see things better than other people can see things
Right.
the more you practice. But because we can't practice broadly everything, right? You can't imagine Elton John stepping out from the playing piano and playing football like Jerry Rice or something. um, be, be, because it takes our time to practice that deeply.
Mm-hmm.
If you think about deep learning algorithms and AI, it's just taking that to the next logical conclusion,
Mm-hmm.
right? That's what's happening. They're consolidating information and error correcting, and at first will help the machines error correct.
Mm-hmm.
If you take that further out, they don't need us to do it.
Now, question: how much further out, based upon your based upon what you see and what you know behind the scenes, how far are we away from machines actually really altering or no longer needing humans in certain positions, especially in automotive and a lot of sectors that people were just recently released from? Will they be going back possibly to some of those sectors?
So that's the critical point. People are asked the question like it has to be a light switch,
Mm-hmm.
right? It doesn't have to be a light switch, because industry and after industry after industry is going to see this in a logical progression, and it's all deflationary. It
Mm-hmm.
makes things better, right?
Mm-hmm.
It makes things less costly and everything else. And people want to say, okay, it's going to be like it is now, status quo, and then one day it's going to change.
Mm-hmm.
That's what Blockbuster believed, right?
Yeah.
It's going to stay the same. So every single industry that it happens in, and it's already happening in countless industries, is more deflationary in nature, and accelerates the whole process.
Now, and so just to go out there, a part of this technology, there's a lot of benefits that's on the front line that will change our lives in a beneficial way. But then you have on the very deep end of things, Elon Musk mentioned not long ago the dangers of AI and how it's going to destroy humanity. I mean, it's all the dangerous side of things. That if that becomes too smart, too good, to whatever, I don't know how to even list that, to where it might one day realize that we don't no longer need the human race, or we can, if it can learn. And you see where I'm going with this, like the dangers of it, like, and the fact that I know that they're Neuralink, they want to connect us to the cloud, and
yeah,
that doesn't sound exciting to me.
Company, and I know the CEO of that, and I know who's running that
Mm-hmm.
that company. But if you just play this forward, if you could have superpower connected,
Mm-hmm.
you could have super memory, and you could see everything, and it was safe, like say Neuralink, would
Mm-hmm.
you do it?
So on a personal note,
Yeah.
from my personal belief structure, from a religious standpoint, I'm not too confident that any of that stuff is safe or trustworthy for me, because of some biblical prophecies as to where things are heading. So I don't think I would opt in willingly.
Okay, so do it the opposite way. This
Okay.
is what creates it's people who have phones.
Mm-hmm.
How often do you go without looking at your phone? Right, you take it out. It's an extension right now.
Correct.
Right? It's right now already there.
Mm-hmm.
The augmented human to that. If you don't do it,
mm-hmm.
and everybody else does it, you might look like their pet.
Mm.
And so it almost doesn't matter what any individual chooses, because I'm the same. I can't see myself actually connecting to a machine.
Mm-hmm.
But the point is, if some people do, and they have superpowers that make us less so,
mm-hmm.
more people will.
Whew, that's going to be, and so that just that topic itself, that conversation itself, is that I see a lot of people saying by 2030, we will see the result, we will see the fruition of all these things that are in somebody's imagination actually been utilized and practical, and everyone have avatars that you can do certain things with and stuff like that. So do you think this transition we're in now will actually is speeding that up right now?
Yes, I do. And so when you're talking about it, so go to jobs specifically, because
mm-hmm.
really what we're talking about, the only scarcity is high paying jobs,
mm-hmm.
right? That's what's happening. We're driving scarcity into high paying jobs because we can't see. We're asking the wrong question. We're asking a question: how do we retain more of our high-paying jobs, so that our system doesn't fail.
Mm-hmm.
And butchering the whole and by doing and actually printing more money into that, so more people need high-paying jobs
Mm-hmm.
when we know that jobs are going to come out. Oh, did I lose you again?
So yeah, it was
Yeah.
short glitch. So yeah, so the concept of jobs is going to change because of the technology advancing, and
So what if we ask this question instead?
Mhm.
How do we build a society where we don't need as many jobs?
It's a great question there.
Right.
Mm.
And if it's factual, so if everything that all the data points to technology is expanding, it's moving faster and faster across all industries, and it is highly likely that that's going to be an erosion of a lot of jobs. Like globally, there's going to be less jobs in the future than there is now, based
Mhm.
on what we just talked about.
Yeah.
Now, that on that point, we can make an argument, and we can say that hasn't happened yet, and there's been times before, right, in history where technology came in, and electrification, right,
Mhm.
electrification. Everyone said it's going to destroy jobs, and in the end, it created new industries.
Mhm.
So, so there's a chance that that happens, but I don't think electrification is the same as AI. Nobody said electricity is going to be smarter than humans, right?
Mhm. Right.
And electricity moved across industry, but it wasn't moving at an exponential speed across. I think if that assumption is false, that there's going to be if people believe today, head in the sand, that there's going to be more jobs, and there's actually less, and all of the policy response is based to make sure we have more jobs, you can see what's going to happen to society.
Damn. Yeah, that's real. Oh man. So as we get ready to draw down, I want to make sure I put it out there. So give people a chance to ask any questions. And so I'm talking with Jeff Booth, the author of The Price of Tomorrow. And so I'll put the link to this in the description if you guys want to go grab a copy of it and learn more about the concepts of how technology will definitely play a major role in our lives moving forward. And so I want to touch on some of the nature of the going back to the digital currency and cryptography and cryptocurrencies, Bitcoin, things like that. What's your perspective on that, given the fact you know the technology and all that stuff behind the scenes? What are your thoughts on that?
So I see. Um, Maybe I'll first touch on gold. If you ruin the foundation of trust in a currency, and every country is trying to manipulate their currency down to protect their jobs,
Mm-hmm.
then you lose a foundation of trust globally, and it's just it just creates a mess everywhere. That's
Mm-hmm.
actually why gold served before to be pegged as the U.S. dollar against Bretton Woods,
Mm-hmm.
and 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 gold has a market cap. You probably know this better than I, but about $7.5 trillion today.
Yeah, give or take it.
And it has a market cap of $7.5 trillion, not because it's money, right?
Mm-hmm.
Not because of jewelry,
Mm-hmm.
because it was formally tied to money.
Mm-hmm.
So the question on that 7 point, and I believe it's actually something you should hold right now, because it's a hedge against what's coming. But the question about the $7.5 trillion market cap is, will it be money again?
Mm-hmm.
Right. That's really, will
Right.
a new currency regime tie to gold? I suspect not.
Right.
I suspect it looks more like something like Bitcoin. And why I would say that is, well, number one, it's built on a network effect, and it gets better and better. The more people use it, the more it accrues trust.
Mm-hmm.
Um, and so I'd have all your listeners look up network effect and what that means. And,
Mm-hmm.
70% of all technology companies are actually the power is really in the network effect. That's what creates value. 70%
Mm-hmm.
of the value in all technology companies, and Bitcoin works on a network effect. So I suspect that at $120 billion market cap, right, you
Mm-hmm.
have an asymmetric bet with Bitcoin, right? So
Mm-hmm.
so at that type of price point, if it becomes a future tied to I don't think it's a currency, but I think it could act like a global reserve, right? That people tie to. Then you can see the upside versus downside.
Good points there. What are your thoughts on? I saw somebody in the chat mention 5G, and as a part of technology, the connecting us, everything being connected, super fast speed, but yet untested nature of rolling it out, and there's a mass push for it to be rolled out without much testing, according to what information we've been given. What are your thoughts on 5G? Is there any unknown dangers, or what are your thoughts on that?
Most technology has unintended consequences too. So, but if you look at the science of behind most of the 5G papers on the spectrum where it is, it seems to be safe. It is moving more towards microwave, and you don't know how far that is. I don't know. So I think for myself, I am reserved on it. But the economic consequence, it's going to roll out no matter what, because at 20 times speed advantage to 4G, and what that does to data, the speed of AI, it's going to roll out. So again, it's going to accelerate. It accelerates the tech.
Yeah. All right. So with that being the case, having a couple of glitches there. So once again, Jeff, it's been great having you on the show, and definitely would love to have you on down the line again and get your thoughts as to what's going on at that time, and as well as stay in tune with the technology side of things, because I'm real curious and I love learning myself about the changes that's underway, because I would like to be a part of it. But from a practical standpoint, I saw somebody mention out there, how can I get involved in AI? What are some things that people can probably use this information to get ahead of the curve as far as having a little bit more knowledge in that area to better themselves as this stuff rolls out, in your opinion?
Well, so I guess it's not just AI. There are a whole bunch of industries that are going to be massive beneficiaries of technology and what's happening. So a lot of the companies I'm involved with right now are exploding in growth. So one question kind of everything I talked about now seems dark. Oh no, what's going to happen? It's only dark because of the mindset, and we're changing a structural change from an existing system. And people protecting the existing system are going to fight at all costs.
Right.
If they fight it, they're going to make it worse. I wrote the book so that actually we could have a better debate on what happens. I'm wildly optimistic about some of the ways we can solve this with technology and different companies and some of the different industries that work. What I would say to the question is, please read the book. If you because it's broad across. It tells you a whole bunch of these trends. It points to some of the industries and why they're going to see massive growth in the future. And it's not just AI. There's a whole bunch of industries that are going to see major growth out of this, and it changes. So there's lots of opportunity as well. It's not all dark. You just have to pick the right spots.
Right, pick the right spot, and so I do agree with that. And so it's people that have that perspective of this change is bad that will probably not be well positioned for just adopting the change and finding ways to take advantage of opportunities as it unfolds. So I understand how you mentioned that. So, all right, well, Jeff, it's been great having you on RTD. Any last thoughts you want to leave us with? And so I put the book in the chat there, and I also put it beneath this video here so people can find out more. Any other place you want to direct people to follow you and stay in tune with what you have going on and interviews and websites?
My Twitter handle, I think it is @JeffBooth. And otherwise, the book is probably good, or my personal website, jeffbooth.com.
All right, so here's your Twitter account. I'll put this in the chat as well so people can go follow you there and stay in tune with what you have going on. So once again, Jeff, I appreciate you joining us here on RTD, and definitely it was a great discussion, and I'm feeling the direction you're heading with your analysis on technology and how it's deflationary nature. And yeah, I have to do some more educating on how to get on board and take advantage of these opportunities myself as they unfold, because I'm in the tech space, but not to that magnitude, but I want to get there. So but once again, thanks for joining us, everybody. I appreciate you guys for taking time to join us this afternoon. Hope you learned something. Go get the book, educate yourself, and we'll be back later on this evening for another live stream, and we can go from there. But other than that, enjoy the rest of your day.
Thanks a lot.